All right, Assalamu alaikum, everybody. I hope everyone can hear me okay. Um, I'm Noshad Virji, the founder of Sharia Portfolio. Sharia Portfolio is our original wealth management company focused on Sharia compliant wealth management. We started the company back in 2003 and since then have been continually growing in different areas. So our progress has been that we started with wealth management, then we added some private funds, then we launched our Canadian company, then we launched our fund company. Now, there's the chart that shows everything. And in 2020, we launched our international company, SP Global Wealth. And at present, we work with clients in 14 different countries around the world. We manage about 3.7 billion or so US dollars, and we're growing at a rate of about 50 million per month. So the interest in Sharia compliant investing has continued to grow throughout all this time. Now, everything I just explained is basically on the investment management side. Since we started back in 2003, we have been asked about loans. And so we started thinking about that more recently because we work with the 1 out of 10 people who have wealth. There's another 9 out of 10 who need help financing cars or credit cards or whatever else there may be. Our first product is the auto loan, which we've already started. We're already helping people with zero interest auto loans. This has been kind of an exciting endeavor for us. So if you're not already familiar with SP0, I would definitely suggest looking at our website, sp0finance.com, and see what we're all about. Our auto loan business is already up and running. We're also working on a Sharia compliant credit card, which inshallah we hope to launch within the next 9 to 12 months. So we do have a few things going, and we are really excited about this space. And as I mentioned earlier, we've brought on a whole uh, LifeSmart system to help educate people about Sharia compliance and about um, how to understand their finances. Because one of the things that I've seen, even with my super high net worth clients, people with portfolios over 100 million, I'm also finding very surprising to see that they don't know some of the basics about financial literacy. So this is something we really want to tackle, and at the moment, we're actually offering that for free. So your total cost to become financial literate is zero. It costs you nothing, and we have this program available right now. Um, so for now, I'd like to introduce Ali Zafar and have him talk about LifeSmart and kind of get us all started on the thought of financial literacy.
There isn't necessarily a correlation between the level of money someone has and the amount of financial literacy they have. And there's this misconception that a lot of people have, which is I'm not yet financially literate, but as I become more financially successful, it will happen. But those two things are one, they're linked. So being more financially literate will help you to become closer to a level of financial independence that you want. And secondly, it has to be done deliberately. It's not something that will happen by itself. Just because you have more money does not necessarily mean you'll become more financially literate. And we saw that a lot. It was a problem that we dealt with, not just investing and looking after the money for our clients, but educating them in a way where they understood what was happening, they felt comfortable, they felt composed. When something happened in the markets, we knew that they would not either panic or ask. How people need to learn is they need to understand that whether you are focused on money or not, there will be inevitable triggers in your life that you come across which require you to make a decision. And for that decision, you require a level of financial literacy. And the challenge is most people don't get that financial literacy until they have to make that decision. They often scramble to try and learn as much as they can, and they make those decisions under pressure. Sometimes, unfortunately, they make the wrong decisions, and the consequences are then laid out in front of them in real time. So, our goal is to help people avoid that, is to bring the information to them in a way that they can access, they feel comfortable with, and that they can actually then implement, not just learn theory. It's fantastic. Provide people with a product. We actually want to change their behavior. And financial literacy became not just an add on, but a core offering within within everything that SB Zero Finance is providing. So today is we're going to cover some of hopefully what seems to be relatively simple. We're only going to do the basics of a few things that are whatever level of wealth you have, you need to understand these terms very quickly. So those four topics that we will go through is number one, you have to know your numbers. This is the foundation of getting started with decision making, with financial literacy, and with improving any situation, whether that is financial or any other aspect of your life. Secondly, it's a little bit about the psychology of money. So, some things around frameworks on why you spend money, where it goes. Thirdly, needs, wants, budgeting, how to set up funds and in saving funds and emergency funds. And then finally, the actual credit products that SP Zero Finance offers and how they're structured, and a little bit of explanation on why they're structured like this and what the actual mechanics of them are. In terms of the numbers, there's two, let's call them pillars that everyone should know. So if there's one thing you take away from this call, please go away and try and make sure that you know your own numbers. Again, it's very hard to improve a situation or to make good decisions if you don't know the base from which you're starting. Those two pillars are kind of your net worth, which is your assets minus your liabilities. Now, many people think that this is something that's kind of a vanity metric or something you do once you have a high net worth. It's not. It's a really good way, arguably the most important way to track your progress when it comes to financial performance. It is simply you make a list of all your assets. So this is anything you own that has value. So it could be cash in a savings account, it could be jewelry and gold you have, it could be your car, it could be your home, it could be some investments, it could be a pension pot. Anything that you own that has a relatively significant value, you consider that an asset. Then your liabilities, and your net worth is simply your assets minus your liabilities, in a smart way. So they have a higher portion of their money in assets and they've taken out less loans. So they find that their net worth is growing faster and is larger, even though they have a lower income. That it will be likely to have a bigger impact on their long-term financial freedom than simply having a immediate income, immediate higher income right now. So this is why being able to at least regularly, but if not regularly, at least at this point, track and be comfortable with knowing what your net worth is will make a big difference. The second pillar is your income and spending. This one is what most people expect. So people know about budgeting. People know that, well, one of the cores of financial literacy, one of the cores of money management is I need to know a level of what my budget is, how much money comes in and how much money goes out. Again, most people do know some things. They know their salary, they know how much money comes in, they have an idea of what they spend on different things, but a surprisingly large number of people have never actually laid it out. They've never fully actually thought or created it. And it doesn't have to be particularly complicated, but they've never seen in front of them the numbers to say this is exactly how much money is coming in and this is exactly how much money is going out and in which categories. So that's quite important because once you start writing it out, there's often things that will surprise you in terms of how much money you spend on them or how little money you spend in some areas, but it goes into other areas that you did not know. So please go away from this session. It does not have to be complicated. You might feel, a lot of people do sometimes feel it's daunting at the beginning, but once you start to sit down, find these numbers individually, you'll see that the more you kind of unravel, the clearer your picture becomes. And just doing this exercise alone will make you feel a lot more comfortable with your money. In terms of psychology of money, this is really important because a lot of people are quite tough with themselves. So they use very negative terminology. I can't believe I did this. I've got myself into this situation, etc. What's really important to understand is that we're not robots. Money is not a logical decision. It's driven primarily by emotion. There is a lot of different factors that go into the way that not only do you invest, but the way that you spend money, the way that you save money, and it's there's many studies on this, everything from how you were brought up, your family dynamic, to the country you were born into, your cultural identity, to your religious identity. The point is for you to acknowledge it, for you to realize that that is the case, and ideally not be so tough on yourself. So some of the factors that really do come into consideration when it comes to money is habits. So that's a big one. A lot of people, or pretty much everyone, spends money in certain things that are habitual. They don't make a decision. At no point in that purchase or kind of a money decision or money aspect action, let's say, is there a decision making. They don't say, should I do this? It just happens automatically. Then you've got money decisions that are linked to emotion. So they are either to balance something out or because of an emotion. So things like when you're stressed, when you're tired, when you're bored. These are decisions you make to regulate the emotions or to deal with the emotions or as a result of the emotions. Thirdly is identity. So who do you want to be seen as? What do you want to be seen as? So do you want to be seen as generous? Do you want to be seen as successful? Do you want to be seen as, specifically sporty? Do you want to be seen supporting a cause? So all of those elements basically change how you spend your money. And this is an important one because I think this is pretty significant. And I can speak personally in how I spent my money. And when I learned more about this, it helped to identify that, yeah, actually a lot of things is linked to not just the identity that I have, it's the identity that I think I have or the identity that I want, which is really important. Of course, pressure is a common one. We all know the concepts of peer pressure. Again, people are aware of it. That doesn't mean they're able to not do it. It is very, very common. So peer pressure from family, from friends, from culture. We all think we're immune to these adverts we see with these million-dollar corporations who are spending all these money making adverts and telling you how rare diamonds are and how important they are to declare your love. And we always think we're the ones that see through it. But the reason that so much money is spent here is because they are getting some of the best minds in the world to work out a way to essentially pressure and convince you to buy things that will benefit them and often that you don't need or even want. Other things are convenience. So this is a common one, especially in the busy lifestyle we live now. So delivery fees, subscriptions, things that you just pay for or you have already paid for in the past and you just don't even have the time or the mental capacity to get rid of it. And then, of course, we'll come on to needs and wants, but there's the money that you spend because you genuinely need to. Now, when you bring all of this together, uh, none of this is groundbreaking. You hope most of you are nodding along to all of this. There was a lot that you could resonate with. I hope there were ones here that stood out to you. I know there's, like I said, there's ones that stand out to me more than others. They all play a part, but there's ones that probably play a bigger part in how I spend, invest, and deal with my money. But the point really here is to know that, again, that it's okay to make mistakes. It's okay to not be perfectly logical and to not be perfect, full stop. That's not what dealing with money or being financially literate is about. It's about understanding the limitations, understanding the psychology behind it, and then as we continue to equip you with the actual financial knowledge, you can use that to make better decisions and improve your situation. The scenario is, imagine you have a full year salary. Imagine you have, the number doesn't matter, but let's say it's a significant amount of money, 50,000, 100,000, $200,000 that land in your bank account tomorrow, and you can only use them with each of these categories in turn. So if you press got it first, your first category is health and well-being. So let's just say you invested 100,000, 50,000, let's say a year's salary into your health and well-being only. What do you think that will go to? So you'll be able to see what your previous score was, and I assume for many things it will increase. So your health and well-being, if it was 7 before, maybe with more money you can move your second scale to where you think it will be with that money. Then, when the next one appears, family and connection, again, now imagine you spent all that money on family and connection. Where do you think that would move to? And again, I'll give you a minute just to go down and select all of those. Okay, fantastic. And then finally, if you press next and then again, got it. Uh, Same thing again, but this time imagine if you had an extra 12 hours of extra time added to your week. That time could again only be spent on one of these categories at a time. So you had an extra 12 hours, you could only spend it on your health and well-being. You had an extra 12 hours, you could only spend it with your family. Go through and again, you'll see the original score you did at the beginning and see how that would impact each of those. So how would it impact your health? How would it impact your family connections? How would it impact your career? So an extra 12 hours every week you could dedicate to each of these categories in turn. Okay, fantastic. When you're finished, just press next and you'll be able to get your results. So essentially all that will tell you is your average score now, your average score with the extra money, and your average score with the extra time. And the reason that's important is because many people we see chase or make money decisions thinking that that will solve a problem that actually is not a problem caused by money in the first place. So the idea behind this is, and again, you can take this away, do this again, do it with your loved ones, and take some time. I believe you can download this, screenshot it, and refresh it and go through it again. The idea behind it is just to be very conscious. There are many, many areas of your life more comfortable with your spending decisions and less frustrated when you are expecting things that you do with money that don't end up happening. Because we see a lot of people are very frustrated because I mean, one example, a very specific example is people who, or a few individuals who are worried about the relationship they have with their kids. And as a result, they want to work more, to earn more money, to go on more holidays, and to spend more time with their kids. And what they find is that drive to earn more money means they actually end up spending less time with their kids, which further, you know, pushes them away from their kids in a way. Whereas actually, instead of chasing that money, the actual outcome that they wanted was to spend more time with their kids or to build a better relationship with their kids. And that could be done more directly. On the other hand, if there is an individual who is, worrying about security and so on, for them, that money would make a huge difference. So it's more being very mindful of exactly what areas of your life and how you want to continue with your money decisions. Now, needs, wants, and kind of emotional spending. Again, this is not groundbreaking stuff. Most of this stuff you guys hopefully should be nodding along to or thinking, I already know this. The idea behind this is all of your spending and outflows can be summarized into needs, wants. The challenge we have with people here is this is something that is it's not a judgment exercise. It's not something that you need to do to try and prove it to anyone. This is again something for yourself. Needs are things that you need which are essential to live. So we're talking about your rent or housing, if you have a mortgage, if you have some other loan to live with, might be quite an important thing that you do with your family. It might be quite a nice thing that you do, but it doesn't necessarily count as an essential. Essentials are things that you literally need to survive. So utilities, transport, basic clothing, your minimum debt payments, anything that is a core essential spending that you cannot go a month without. That is your needs. Again, there's a lot of debates around this. People are convinced that that morning coffee is a need because they can't go into work without it on the way in and so on. That's fine, but again, think if is there an alternative? Could you buy coffee from the supermarket and make it at home? Again, that's not what I'm telling people to do. I'm just saying recognize that a want and a need is different, and you need to be able to understand the differences between them so that you can make a decision. So once examples are eating out, coffee, subscriptions, travel, tech upgrades. You could a basic phone is a necessity. The latest phone is definitely not. Hobbies or anything else that you spend, even to some extent, some of the sports and hobbies that you play would kind of fall under the wants thing. Now, the reason you want to categorize those things like this and be so strict with it is not to, save the money or hoard it or not spend it at all, because that is, it's actually not even encouraged Islamically. You should go out and enjoy your money. The purpose of this exercise and for knowing it is to know that the money that you spend is done in a mindful way and on things that deliberately and genuinely bring you happiness and pleasure. So a lot of times when we do exercises with people, we find that, like I said, they're very surprised. They'll say, I had no idea I was spending $300 or $500 a month eating out. I actually don't even enjoy eating out. I just go with some friends every night, every other night, or I'll go after work. People ask me, but I really wanted to go on a holiday, and I did not realize that if I just cut down my eating out for 3 months, that could fund a holiday. So for a lot of people, that's the decisions we want them to make. For them to be conscious to know that actually this is where I'm spending my money. It's an optional thing. I don't really actually want to do this. I would much rather spend my money here, and that's your choice. That's exactly the kind of decisions where we want to funnel people towards. Now, the big challenge and the thing that we all do that you need to watch out for is buying to impress people, um, paying for brands over value, unnecessary upgrades, overspending, and kind of falling into peer pressure. And again, this is very easy to say, very, very hard to maintain. A rule of thumb is if you feel like you want to buy something and you're convinced you want to buy it for yourself and not for other people, try and imagine if you bought this and it was invisible. So whether that's a phone or a watch or something, and no one else could ever know that you had it. Would you still be as happy to purchase it? Now, for many people, for many things, the answer is yes. Like they might want to buy that expensive car, but they genuinely get pleasure. Every time they sit inside that car, it brings them happiness and so on. Great. But for other people, they are buying that car purely to impress their neighbors, to impress someone else because social media has told them, because society has told them, because they saw an advert, etc., etc. As I'm sure all of you know, that is unlikely to bring you that happiness that you're craving in the first place. So be very, very careful and mindful of why you're buying things. Buying to impress other people and paying for brands for the sake of being seen to be, like I said, a certain identity or someone that you are, is one of the biggest ways we see that people end up in either debt or they're stuck in a situation where they're earning reasonably well, but find themselves stuck. And they come to us and they say, I don't know why I can't get out of the situation. My financial situation is not getting any better. And I've been kind of in this place for a very long time. So this is a big cause of it. Um, okay, so this is kind of the budgeting system that we recommend to people. So one of the common ones that we've heard previously are things like the 50-30-20 rule, and there's various other ones. And this looks a lot more complicated than it is. So let me explain it very simply. We talked about being very conscious and aware of your needs. This is a number that you need to know. You need to know what is the number that every month I need this money to survive. There is no option, like again, to bring that coffee example, to bring that gym example, I can't not pay. Like you can't not pay your rent, you'll be evicted, etc. So what is the number that is your absolute necessities that you have to pay? $2,000. The necessities. And because you've absolutely found the core necessities, that is a non-negotiable. Secondly, whatever is left, so in our example, $3,000, you need to take one third of that amount, so $1,000, and immediately save it. We'll come on to what you save it into and investments and so on, but that one third needs to be saved. And this is the key part. You do it first. What most people do at this stage is they'll do step one, they'll cover their essentials. Then for them, step two is spend everything else or spend a portion on things that they like, hobbies, traveling, and so on. Then whatever is left at the end of the month, they will save it. Now, for a lot of people, there is not a lot left, or what is left is inconsistent. So what is important is once you covered your needs, you pay yourself first. So it's the concept of pay yourself first. You take that one third of everything that you have left over after covering your essentials, you put it into the funds and the saving pots that we'll talk about. Now, whatever is left, so the two-thirds, in this example, the $2,000, that's your guilt-free spending. That's the money you spend on your wants, on the hobbies that we talked about, on your subscriptions, on your coffees, on your gym memberships, on anything else that you want to spend your money on. That's what you do. And you will know because it's your guilt-free pot. You know that you've covered your essentials, you know that you've covered your savings. So that money, and then the savings pot. So that third, you need to split them into three pots. Okay, so you need to do these in order as well. The first pot that every single one of you on this call should have, and if you don't have it, please start working on this today, is an emergency fund. This is essentially a pot of money that you can dip into if there is any kind of, as the name suggests, emergency. If there's an unexpected car repair, if there's a medical bill, if there's, if God forbid you lose your job, anything like that, if you miss a flight and you can't cover it, anything that is not planned, the emergency fund is where you dip into to be able to cover that cost. The ideal amount that you want in your emergency fund is 3 to 6 months of your needs or your essential expenses. Remember that number? In our example, it was 2,000. So you need to have minimum 6,000, ideally $12,000 stored away in an emergency pot. Now, this has to be kept separate from your everyday account and it has to be kept in an easy access. I actually knew someone who had a significant amount of money and she was very comfortable, but she had her money in a access account that took, think, 2 days notice. She had a emergency with her cat, and I'm not sure how bad it is in the US, but vet bills in the UK are through the roof in the last few years. Now, she had much more than that in her emergency fund, but she couldn't access it. So at that point, the vet was calling her saying, "Well, we can't do the treatment until you at least pay like a significant more than 50% of it." So she had to literally borrow money from a friend. The reason I'm illustrating that example is because the emergency fund is not just the amount, but it's the characteristic of where you keep it. It needs to be easy access, needs to be kept separate, and you need to keep it somewhere where you know the account number, you know how to transfer it, you have full, if it's a joint account, you have full decision-making authority, somewhere where it's as easy to get as if you had some cash in your wallet and your wallet was in your hand. That's the whole point of an emergency fund. Now, as tempting as it is, for obvious reasons, you can't invest that money, you can't do other things with that money, and we'll come on to that. That money needs to be there for those emergencies. Having this is a big factor in terms of stopping people getting into debt or getting into problems. A lot of people who find themselves in those situations are actually quite financially comfortable. They're doing reasonably well, but then they face an emergency. And because they have a pretty good investment fund, they've got a decent income, they just are not able to manage their cash flow. It's the same as many businesses. You have businesses that are highly profitable, which end up declaring bankruptcy or going out of business because they've not managed their cash flow, because of the timing of money coming in and out. An emergency fund is your buffer. So again, I'm going on about it a lot because it's surprising how many people don't. Stage two is your goal fund. This is for any expense that you is coming up in the next 1 month, next 2 years, next 5 years, next 10 years. And you can time it like that. You can have short term, medium term, and long term funds in a known time frame. That's your goal fund. And then the idea behind it is once you know that, you put a very simple plan in place. So you say, I need £20,000 in 2 years' time. So you just do 20,000 divided by 48, and that's how much money you need every month if you wanted to do it equally. But the idea being that that goal fund is something you build up for a predictable expense in the future. Future expenses. And it could be, like I said, short term things like I want to go on holiday in 9 months, and it can be long term things like I want to pay for my kids' college in 15 years. So, and you can separate those out into different funds. We're not going to go into too much detail about investments today, unless there's specific questions, and we've got the expert here with Noshad to answer that. But once you have those goal funds and you're confident about the timing, you can make investment decisions to do with that link into the timing. So if you've got, for example, your kid's college fund, and you know that your kids are 2 or 3, 4 years old, and you won't need that for the next 15 years, and boxes have been ticked, you know that you can and then the third fund, so once you have your emergency fund, once you've put together a plan for all of the goals, thirdly is your investment fund. And as you can see, it probably overlaps a little bit with the goal fund, but we always ask people to separate it out because there is some pots that are literally for I need to pay for my Umrah trip in 2 years. And then there's, well, I'm saving my money for Umrah, but I also want to put some money away for my retirement, for the future, for investing, for my parents, for my kids, and so on. That's a separate longer term, hopefully longer term fund, and that will be your investment fund. Generally, we say you want to look at least 5+ years here, especially depending on the type of investment that you're looking at, especially if you're going towards higher risk investments like equity and anything that's kind of away from savings focused fixed return products, even Sharia compliant ones that are relatively more short term, let's say. But again, I'm not going to go into too much detail about investment until the question comes in. But the idea is more your investment fund is the portion of your net worth that will hopefully help you to grow.
Thank you so much for that excellent presentation, Ali. It's been very enjoyable and I think very insightful for most of us. In in all of this was the concept of basically taking account and tracking, and part of that tracking is something that we're already familiar with, right? Most people track their steps. We track our water intake. We track our workouts. We even track our sleep. And one of the most beautiful names of Allah subhanahu wa ta'ala is Al-Hasib. He is the accountant. He is the tracker. And he is tracking everything that we do. And we are told, hasibu qabla an tuhasabu. Like we are supposed to, within our lives, every day track ourselves and try and better ourselves with each step so that we are better than what we were before. We're always marking our own goalposts based on how we did before. It never has to do with anyone else. It has to do with ourselves, with our own situations, and similarly with finances as well. Each of us is in a very different boat, right? Where their accounting is done, and with making sure that constantly they have everything placed right. And so that just brings up a beautiful name of Al-Hasib, which and another thing that it made me think of is the verses in the Holy Quran. There's two of them that it made me refer to. One of them is Surah Al-Furqan, verse number 67. And those who, when they spend, are neither extravagant nor miserly, but hold a medium way between those. So Allah is always urging us to that balance in religion. And there's another verse as well from Surah Al-Isra, verse number 29, and do not make your hand chained to your neck, nor extended completely, lest you sit blamed and bankrupt. Okay, did I pray Fajr every day this week, versus last week? Maybe I missed a few, right? And continuously bettering ourselves. But even when it comes to finances, this is something that is encouraged in the Holy Quran, definitely. So with that, I would another aspect that I wanted to talk about is people might be wondering basically, There's a lot of talk about investment, a holistic system, right? It's like when you go into medicine, you want to know that the doctor you're visiting is looking at you as a human being, right? Mental, emotional, physical, all the parts of you. And if anything's broken, it's obviously going to be linked to another part, right? So similarly, we at Sharia Portfolio Group of Companies and we're constantly expanding to offer more Sharia compliant options and availabilities and products that don't exist out in the market. You will be able to see if you type in sp0finance.com/literacy, you'll see the LifeSmart portal and just.com. And then if you go to the website, to the main website, you will see us under resources and financial literacy portal. So you can go to sp0finance.com/literacy and you can basically just sign up and join today for free. You receive a certificate at the end of the course, which is signed by Ali and Nashad. And basically you're one step ahead in beginning to understand how your finances work and inshallah, you'll be able to manage them better as well and reach all the goals that you have set for yourself. One of the other very, very exciting things that we're doing as part of this holistic offering is to work with SP Auto Sales to hit that little button. Let me know if it works for presenting at your end.
Assalamu alaikum, everyone. First of all, thank you all so much for being here today. I really appreciate your time, and I'm excited to share something that I believe can be very beneficial for our community. Our goal is to give Muslims an alternative to conventional car loans that are based on interest and compounding. What makes SP Zero Finance different that we do not structure things like traditional lender, we do not charge APR, and we do not use compounding interest. Instead, our pricing is based on a fixed markup with the full price disclosed upfront and fixed schedule payment. That means people know exactly what they are agreeing to from the beginning, with more clarity and transparency. Most important point is that everything we offer is a Sharia compliant, and our contracts are all Sharia certified. As Brother Ali was speaking earlier about the different finance options, at SP0, we at SP Auto Zero, we do offer three different finance options at the moment and a fourth one to be upcoming soon. The first one that we offer is Easy Lease. This is for people who like to change their cars from like every few months or every few years. Easy lease. This is a straightforward lease with a predictable payment and clearly defined end of the term options. At the end of the lease, the customer may return the vehicle, upgrade, or transition into ownership depending on the structure. The second thing we offer is path to purchase. Path to purchase, this is for people who would like to own their car at the end of the term, or if they are not sure, they also can upgrade or change. So path to purchase, we lease you the car. We lease you the car first under a separate lease agreement. At the end of the lease term, you have the right to purchase the vehicle through a separate purchase contract with all the terms disclosed from the beginning. This keeps the lease and purchase separated in Sharia compliant structures, while also giving you the option to purchase, return, or upgrade. And then the third one that we will have very soon is Murabaha. Murabaha is also for people who are looking to own their car. Um, in Murabaha, we purchase the car and sell it to the customer at one fully disclosed total price to be paid over time in a clear installment. So instead of an interest-based loan, it is a sale with a known price from the beginning. We also offer refinancing. So for someone who already has a car financed in a conventional way, there may be an option to transition that into a Sharia compliant structure as well. Overall, our goal is simple. It is to help Muslims access vehicle financing in a way that is more ethical, transparent, and aligned with Islamic principles. Thank you again all for your time, and I will be happy to answer any questions. If you have, please throw them in the Zoom chat, and I'll be happy to answer them.
What's the best way to decide if I should lease the car or finance the car?
So first of all, I would ask about your situation, your plan for the long term, and this is why we have different options. If you're someone who doesn't like to stick with one car for a long term, then I would suggest that you go with the easy lease, because in that way it gives you the option to keep upgrading your car, upgrading your car from year to year, whatever was the term that we agreed on. If you're looking to keep a car for the long term, I would suggest that you go with the path to purchase or murabaha that we're gonna have soon. Also, even if you don't have something specific in your mind, a car model or a car make, we can help you find a car that fits you, as we have access to all auctions in the US, especially here in Orlando, where we operated in Florida. We have one of the biggest auctions where we can find a lot of different options that fits your descriptions and also aligns with your budget as well.
Fantastic.
And I think one of the reasons that that people are going to be drawn to our program, to be honest, is the fact that, you know, it is asset based. Life throws you a curveball and you find yourself having to pay for something huge that you did not expect for, and then suddenly your car payments are falling behind and your interest is, you know, growing. And that's something that, you know, as Muslims, we stay away from riba, right? And that's very important for us, just specifically for that reason. And that's why SP0 Finance exists. We want to be able to help people, to empower people, not just through financial literacy, but also by offering these types of Sharia compliant products that don't exist out there, because unfortunately, a lot of the banking system and a lot of the way the, you know, things work around here is through interest. And they trap people. They make people slaves to continuously have to pay and worry, and you know, the stress builds up and it affects your quality of life. So really, that's why we exist. We really want to be able to help people, and that's the core of what we do. And
Yes, we do. You can trade your car with any dealer, and after the negotiation is over, this is when we step in and purchase the whole car, and then go with the finance options that you decided that you want to go with.
Um, thank you so much, Ahmed. So basically, you know, if you're interested in a vehicle, you can either let us know where you're planning to get the car from, or we can help you to source the car. Either way, in our model, because it's asset based, we're going to be purchasing the car for you and then selling it to you at our fixed rate, so that you know exactly what you're paying and you're not going to be hit with, you know, surprises later on.
Sorry, I just want to address one of the other points about and how Ahmed answered it. He said exactly the perfect thing, because it's something that sometimes people feel like we're hiding. You know, if someone asks you a question, what is better for me, A or B, or what should I invest in? And anyone who how much money the client had, what their assets were, what their net worth is, what their spending is. So we would ask them all of these questions. We would understand it, and then the answer is tailored to their time horizon, their family situation, their liquidity needs, their currency needs, their future goals, their aspirations, you know, what are their hobbies, what everything from how much risk do they like to take in their personal life, are they adrenaline junkies, are they well composed with the market. When it comes to finance, there's not always a right answer. It's about what's right for you. So as Ahmed said, they can guide you to what the right answer is. So rather than saying, is this the right decision for me? You come in with, this is my situation, here's my cash flow, here's my goals, here's everything else. Now, is this the right decision for me? You're more likely to get the answer that's better suited for you. Sorry, I know I'm keep going on about this, but it's something that I think is really missing, and I want people to take that away.
Exactly. I think it's a very important point that you brought up, Ali, that Ahmed, mentioned so beautifully because everyone knows the rap of a car salesman, right? They just don't have a good rap, and that's where we come in. We're here to help you because we want what's best for you. We want to make it easy for you to be able to understand what it is that you're getting into and how to finance it so that you're not going to have any surprises later on. And that's exactly what we're doing at SP Zero Finance. We're trying to make life easier for you and give you all those options and give you the financial literacy to be able to make the best decisions as well.
So one of the things that's come up is there are a lot of people who want to finance cars, but they don't have an account with us. So we created a system called Compassionate Capital, which allows people to open an account with us for as little as $1,000. The credit card and um, the auto loan program. So all you have to do is go to compassionatecapital.com, start an account with as little as $1,000. It's very easy to get started. The website's already up and running. Down the line, most likely starting in January of 2027, we will have this as a fully capable robo advisor. Um, Buy a car through our service or eventually get our credit card as well. There have been a lot of questions about investing. I've answered as many of those as I possibly could. But if you have any other questions, please feel free to contact any of our financial companies, and one of our advisors will be more than happy to speak with you and answer any further questions. If you are interested in an auto loan or are very interested in refinancing a current loan that you might have, talk to Ahmed. He's available here. He works from our office in Lake Mary and is available to either speak or meet face to face anytime. And everyone that is really, really happy with everything we're doing, contact me. If you're not happy, contact Masuma, and we'll go from there. But thank you very much for attending today.
And I'm hoping not to get any phone calls. You can direct them all to Nashad, definitely. And speaking of phone calls, if you would like to get in touch with us, our main phone line for SB Zero Finance is 844 Zero Fin. That's like Zero Finance. Okay. Not a question, but a thank you. You are most welcome. Thank you so much for joining us. We really appreciated your company, and we hope that you benefited from this webinar. We host webinars once a month, so inshallah, look out for the next one. I hope that you are signed up to our mailing list. If not, again, you can go on sp0finance.com. And so keep up with those, and we should be posting any updates to more products that we're offering, as well as exciting news coming up. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh.